Good afternoon, everyone. Welcome to Selecting an Option Strategy. I'm Connie Hill. I'm happy to be here with you today to take a look at a lot of different option strategies. One of the difficult things is being able to recognize what strategy might be best for certain stocks or certain market conditions, and those are the types of things we like to focus on. Now, how many of you did some of the practice trades that we had 2 weeks ago? Barb and Ben both filled in for me the last couple of weeks, and all those trades we did completed. So I'm curious to know if you traded them, paper traded them, okay? And what kind of lessons you might have learned. Feel free to chat those in because we're going to be taking a look at that today. Now I'm on X. I hope you're following me. I am Connie Hill CS. We've got Barb Armstrong in the chat. I'm glad Barb's here. She's going to help me answer maybe some questions I can't get to. And she does a lot of great posting. You don't want to miss out on that either. She is Barb at Barb Armstrong CS. And we'll post educational content out there, things that we find interesting that we think you might like as well. Now let's go through some disclosures and we will get into our schedule for today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for education and information. Should not be considered a recommendation of any sort. We will be using the Paper Money software application. This is what you can download to your computer. It looks and acts a little bit different than the web version or mobile versions, but they are tied together nicely, but we'll be using the software. We will want you to recognize investing involves risk, including the loss of principal. And when you do spread trading, which we'll do some examples today, they need to be done in a margin account. Past performance of any security or strategy does not guarantee future results or success. One thing that's a little different about paper money than the real market is that short options can be assigned at any time up to expiration, regardless of the in-the-money amount. And that's how the real market works. In paper money, it does not make early assignments, so we'd like you to be aware of that, even though it is not going to do it for you in our paper account. When we're working with stop losses, there's no guarantee that the execution of a stop price will be at or near the stop price. All right. Now, typically what we want to do is look at our market conditions, see what's going on, because that might lend us to going towards certain strategies. And then we are really going to look at a lot of examples here today. I have a pretty full agenda, so hopefully we can make our way through every single one of them here. Now, in terms of option strategies, these are all the strategies that we'll look at and use throughout our class, all right? Now, we have not done a ton of bearish strategies, have we? I'm thinking very little on the bearish strategies front, but we have done a lot of bullish strategies. We have done at times some neutral strategies, okay? But we are going to say, hey, we're going to have better probabilities if we go the direction that the market's going, as opposed to just kind of winging it on our own and saying, oh, well, I'll do a bearish trade even though the market's very bullish, right? It's hard to swim upstream and against the tide of what's going on. Now, as I look at the chat now, and I'm going to see if any of you followed along on any of those practice trades. Looks like maybe not, maybe just some friendly banter going back and forth here. All right, let's go ahead. We're going to go out to the paper money, and we are going to start out with AAOI. Now, the last week we were together was November 20th, and there were some specific objectives we had in that class. One of the objectives was to maybe put on some credit spreads that might not work out so that we could talk about what we call a reverse of polarity, which basically means the trade maybe looked one way initially and now it doesn't. And what can we do to maybe change our position from one that's bullish to bearish or vice versa? Okay. Well, the good news is none of that happened. Meaning all of those trades actually went quite well for us. So let's look at the chart here real quick. And then we'll come back here to the actual numbers and what happened. All right, AAOI applied Optoelectron. We got in this trade when it was breaking out of this flag. That was November 20th. Okay. It had basically gapped out of that flag consolidation area. Here is the line that was basically a copy of this flagpole for the length so that we could have a potential target in there. And that went up to about 41. All right. So this one we got in. Guess what? We got out before it even went that far. Okay. We hit our kind of our max gain that we were looking to take out of the trade. The first one got us out here early in the morning. So that gave us a time of maybe a whole 4 days in the trade. This one got us out the very next morning as well, as we'll see. And that took us out of that trade first thing in the morning. Okay. So on this particular one, we did a bull put spread and also a long call vertical. Okay. So we did two different trades. Now, let me get a marker color here that maybe is a little bit friendlier for the black look here. And I want to start out here with the short put vertical. It was a 30.25, so just a $5 wide spread. We collected a credit of about $1.40 on it. That meant we had to risk $5 minus the 140 gives us 360. So 360 was our max theoretical that we could have lost. In this particular trade, it was actually this second one to hit its target here. And we were able to get out with 41 cents. So if we say, all right, overall, 140 minus 41 was a 99-cent gain compared to a 35, or rather a let me rephrase that. 360 is our theoretical max loss. We ended up, we said we'll get out when we get 70% of it, that theoretical max gain. Now on the debit spread, all right, this is our call vertical here, 30.35. It cost us $2.35. We were able to sell it for $4.25 4 days into the trade. Okay, so it executed pretty quick for us. We were in the trade about the same number of days on both of them. Okay, but because the stock made an explosive move, we were actually able to cash out on both of those trades in a positive way. Now, one of the reasons we were able to do that is because we put in a target that we said, go execute if you hit it, and it did on both of those trades. But they're still decent trades, and sometimes you might feel like, oh, I picked the wrong trade. I should have done a different trade. And we just don't know what stocks are going to do, all right? And we might be better at one strategy than another at this point. And so we're not always going to pick the most absolute, the one that strategy that gives us the maximum return possible every single time. It's not going to happen. That's not really realistic. So I just want to put a frame around that of saying, great, both of those trades worked out. Now, secretly, I was hoping that one of them didn't, so we could talk about a change of polarity, but that was not to be. Now, another one that's been quite interesting here, VSCO, this is Victoria's Secret. Victoria's Secret's just been on a tear here. Now, we just did a long call option on this. We were looking when we got in on this day, it was looking like it was breaking out of this flag. Now, kind of that by the end of the day, kind of settled back in there. But what did it do? Just pulled back a little bit, went on this big run. And what we had on it was the idea that we're going to move our stop loss up, move the stop loss up, stop loss up. Every time trying to lock in some gains that weren't realized yet or minimize losses. And so when I go over to my account statement, you're going to see we changed it, we changed it, we changed it. And eventually on this day, I was looking at some numbers here. It had been up a little higher, started to pull back. And I was like, man, we've had a good return here. We're not going to, allow it to be dwindled away. So what we ended up doing was just getting out of the trade. Okay, this is on, let's pull this up. SVCO. Make sure this is the right one. All right, VSCO. Maybe it's VS. I think I did a typo though. VSCO. Victoria's Secret. There we go. All right. Now this one we got into on November 13th. And again, it was just a long option. And you can see we bought it for $5. It was at $14.40 when I finally said, we've had a nice run with this. Let's take profits. And somebody could have justified taking profits before that. But what I want you to notice here was all our stop losses that we canceled, put in a new one, canceled, put in a new one, canceled, put in a new one. As the stock was making some profits, we raised our stop loss to help try to lock in some profits. And if it had pulled back without us executing, then we would have actually come away with something probably decent. I say probably because we don't actually know, because my last stop here was at $9.50, and that was almost twice what the price was. This ended up being 188% gain. So that's why I say we decided not to be greedy, to take the profits and move, and then do what? Maybe look for another entry point on it. Okay, when stocks are trending good, one thing you're going to find is you might be able to trade some of the same stocks over and over and over again until maybe they break their pattern or start to trade a different direction here. All right. About an event, Riceburg, you're looking to attend an event and make it a family affair. Fantastic. I think I may have heard you comment earlier which one you might be going to soon. But I appreciate you just letting us know that so we can look for you. All right, one more trade we're going to look at here. That is, again, was a completed trade. We've had some good success, the ones we look for. This one as well, we put on with the idea that we were looking, at least I secretly was looking to do a risk reversal on this, right? Where we got in with a bullish trade and something maybe went awry and we wanted to see how to change it into a bearish trade. But again, our stock did really well for us, ran up, kind of pulled back, had a really nice run up here. And then what happened that day? Started to slide back down. So we got out with a profit on the 5th before the day closed so that we were able to, get out somewhere in this little area that I had marked as far as profitability. So we ended up on that trade. We ended up with just about a 40% return on it if we look at the monitor tab here. And we brought in 33 cents. It's only a $1 wide spread, so we were risking 67 cents to make 33 cents. We said, if we get a majority of it, let's get out. We had said, let's get out at $6, and that's what it did. It executed for us on that vertical. All right. Well, maybe coming up, we'll have some trades go against us so we can discuss the question that I wanted to answer that somebody said is, can we talk about changing polarity? And I was hoping to provide an example for that, but it didn't turn out. It turned out we did good on the trade. So we're going to move on. Now, how many of you like to look at the heat map? We're going to come over here to the Market Watch. I've got the S&P 500 selected here. And what do you notice about the heat map today? Feel free to, chat that in if you notice something, okay? One thing that I'm noticing is the big players that are moving the market, right? The large cap stocks that are kind of our behemoth stocks, right? We can see Microsoft, NVIDIA, Google, Meta, Tesla, really doing some hard driving of the markets. And then on days when we pull back, you might see, boy, we still have plenty of bullish stocks, but these big guns are putting their mark on how the index is performing overall because of their large market cap. Okay, so one thing that you can do is you can say, well, if our leaders in the market provide us some opportunities, we might want to take advantage of those. So we are going to look at a couple of these. One is not here. Let's go to the NASDAQ 100 real quick. NASDAQ hit another new high today. All right. And you can see who is pushing the NASDAQ around. Yeah, kind of the same players with the addition of maybe Avco here, Broadcom. It's not one of the big seven, but it definitely is one of the bigger players. All right. So if we come over here and we say, all right, we're going to focus on some bullish strategies, it only makes sense to do here. Makes sense to do so. I do want you to see that new high on the NASDAQ 100, right? Nice run up. Could we have a flagpole there? Absolutely. A 2-day pullback. What 2-day pullbacks? 2 to 5 days is ideal. And then a pop out of this little consolidation. Yeah, looks like it's broken out of a flag formation. And if we were going to maybe draw that in, I'll start at the bottom of this green candle and up to the top there. That looks to be about a, this says 4.29%, and it's about 56 points on the NASDAQ, okay, is the length of that flagpole. Make sure that's right. And then it consolidated back, broke out here today. So what would we expect? We're going to expect another run similar to this. Now, are we going to get it? We don't know for sure. The most aggressive way to put that flagpole would be right here at the breakout area. If somebody wanted to be more conservative, you could bring it into maybe the bottom of where that flag where you might imagine that those lows are. Okay, in any case, looks like we still have quite a bit more room to move on the NASDAQ as far as using the flag as a target if we wanted to, okay? So since we're not playing the entire NASDAQ, we might pick out a couple of shining stars in the NASDAQ and decide to trade them. Well, the first one we're going to look at is Netflix. Netflix, I don't know if you're getting tired of Netflix doing so well, but it just keeps grinding higher and higher and is making some pretty decent moves. I mean, their earnings was here on October 17th. So maybe 2 months, 2.5 months, we've seen it run, right? And it just keeps going higher and higher. Nice run up, sharp sell off, right? Little pullback there, breaking out, running up again. Oh, look at this. We have another little 2-day pullback on Netflix, and boom, broke out of there today. And I'd say their flagpole is, I'd probably draw it in like this to that low to that high. So what kind of a target is that going to give us? Probably a decent one. If we do duplicate that, and I'm going to, oops, that was ugly. Let's fix that. Zoom in here again. We're going to take this. We're going to activate the second trend line here. We're going to grab it. We're going to place it. And what does it look like? Yeah, it's got a target up here, maybe about 990. Now, JP Morgan upgraded the stock today. So they had some good press. They increased their price target on it. And it might even be beyond that target. I was thinking it was over $1,000 that they put the target for. Okay, you can check the news and see exactly what it's been doing. Frankie says, hey, I've been doing a lot of short put verticals on Netflix lately, and they've been successful. Well, look at the trend of this stock. There's no wonder they're successful. This green line is a 10-day moving average. And it's just, you know, when it pulls back, it just kind of pulls back to that 10-day right now, marching up. So if we're going to say what kind of a trade would we want to do, there's a lot of different things we could do. Probably something more directional. And so on this one, we aren't going to do a directional trade, but we're going to take advantage of being able to sell some premium. Okay, when stocks are really on the move, that can increase the implied volatility in the options. Let's see where these are right now. So we've got 31, 27, so not incredibly high, but as they go into their January earnings, it's likely that they could do something. Now, what we're going to look to do is to be in and out of something sooner before they have their earnings. So we're going to look at doing December 27. Here is my open interest column. Some months, you know, on some weeklies, they're just not that liquid, and so you just have to bump out to the monthlies. Here, this is actually pretty short time. We're just going to have 16 days to be in this trade. We're hoping to be in and out of it pretty quickly. And we are going to do Let's see here. Let's see if what I mapped out still looks decent. 965, 975. So 965 is actually quite a bit out of the money, and 975, and that might be a little bit too aggressive. So let's do this. Let's start at 940, and we'll go 940. We'll spread it out by 10. We'll do a 940, 950 here. Okay, when I was looking at it earlier, maybe some different strikes would have been appropriate. Because this is only a $5 wide spread, we might expect the stock to get to that place beyond our short strike pretty quickly. But remember, we'll have some time that we'll need to decay to help the trade. Now, if somebody wanted to be even a little bit more aggressive, they could say, well, let's do a $15 wide spread. Okay, let's just do buy a vertical here. So it's just going to grab our next strike price, right? It's going to go grab our 950, but if you want to be more aggressive, you could say, oh, maybe 955. That's going to be what? That's going to have the stock looking for a 10-point move, or 960 would be a 15-point move. Let's see on 960 how if that looks doable in roughly 2 weeks or not. Okay, doable. We need it to be above 960, right? Make sure I have what we were playing around with. Yep, looking at 960, even though we got 950 in there. So 960. I'm going to put my mouse at 960. All right, my mouse, that's about as close to 960 as I can get. Does that look too optimistic? Maybe not so much on this stock. If it's trending really nicely, that might be a time that some traders say, well, maybe let me be a little bit more aggressive and spread the strikes out, look for a little bit bigger move, and therefore look for a little bit more profit in the trade. Okay, so we're going to be a little bit aggressive today. So we're going to make this 945, 960. It's a $15 wide spread. So we're willing to risk $6. I'm going to lock that in and keep the math easy on us. To make what? To make 9, right? Risking 6 to make 9 would total 15, which is the spread here. Okay. Again, some of you might go, that's a little more aggressive than I'm comfortable with. And others might say, yeah, Netflix is running around. Let's put on a bigger target. So we're going to do our first trigger sequential. We're going to do a couple of contracts here. Going to create an opposite order. And then let's figure out, of that $9, where would you want it to go? Now, Chris says, what about the gamma risk? Because it is not going to expire in very many days, you're right. There could be gamma risk if Netflix goes the opposite direction. Then that move could be magnified. Okay, so we're definitely being a little bit more aggressive here. All right. Let's see. What if we were to get, of our $9, would you be happy if we got 70% of that? Right? Not looking for a ton of it, but just some of it, right? 70% of it. So kind of a big chunk off the bone, but not every little last scrap of meat. Okay, is kind of what we'd be looking for here. So let's go buy it back. Let's change this to 1230. Okay, that's going to be our 630 plus our 6. Let's make this good till canceled. We've got our 2 contracts on. They are weeklies. We're noting that. Is it more aggressive? Yeah, it is, for a couple of reasons. One, there's not a lot of time for the stock to perform. Number 2 is just this idea that we're looking for a 15, we have a $15 spread on it as opposed to a $5 spread definitely would be more conservative. Okay. All right, we're going to queue this up. We're going to throw this in our options strategies bucket. And let me see if there's any questions on this particular trade. Yeah, so what we need the stock to do is we want the stock to go beyond 960. And usually what I'll do is I'll come in here and I'll make a little line and I'll try to get it as close to 960 as I can, and then edit it, and then I just make the line even here, right? 960. Make this green, so I know it's a target as opposed to a support or resistance line. And so, yeah, we're going to look for it to go to 960. We'll just put that level on and have it show it. Okay, That's what we're looking for in 2 weeks' time. Doesn't look too like Supermanish. Okay, probably a little bit of a move for this stock. All right. Is that the only strategy you could do? No, you could do whatever bullish strategy you are inclined to do, or maybe that you're comfortable with. There might be 2 strategies you're comfortable with. When a stock is priced so high and its options are so expensive, that's when it makes sense to a lot of traders to make it become a vertical, okay? Be able to participate in that run without spending an arm and a leg, okay, for that. All right. Next on our heat map that was doing pretty good today was Google. Now, there was a little bit of news on Google. My understanding is they announced some chip information, what their chip is. I think their chip might be called Willow, not positive on that. And so they're basically saying we're our hat's in the ring as well here. So the market is treating it kindly. It's up 4.3%. And what we're going to look on this to do is we're just going to look to do, again, another long call vertical. If the options were not as, I mean, this is almost a $200 stock, so it's not incredibly pricey, but they are a little bit for some accounts, right? And so volatility, I mean, it's in a range that's decent, saying we expect this stock to move, right? It's not down in the 15% or something like that. So we're expecting the stock to move, but it's not overabundant. Now, if we get into running in right before earnings announcements come on, then we would expect it maybe to crank up a little bit. Now, would that help a long vertical trade or not? Yeah, definitely would help a long vertical trade if implied volatility started creeping in, because that inflates the value of your premium. Okay, so we're going to go out a little further here. We're not looking for super quick move. Okay, we're going to go out to the January 17s, although it has weeklies too that are very liquid, but we want to give it a little bit more time, not be quite so aggressive on this move. And so we're looking to do here. Let's come out. Price is at 193 right now, so the at the money strike price is 190. So we're just going to do a $10 wide spread here. Okay, a default's going to just come back here. Let's come down to 200 so that we've got that $10 wide spread. 450, I'm going to lock that in. 450 is what we would be willing to risk to make what? 550. 550 would be the max theoretical gain, which would be more than 100% return. Okay, so is it aggressive in that manner? It is. Do you have to be aggressive? No. If you wanted to be selling some put spreads over here, you absolutely could. But because the market is looking quite bullish, the stock is looking quite bullish, responding to some good news today, then that's why we're going to be doing something a little bit more aggressive that's definitely not neutral. If we were doing a put spread or something, that would be, kind of neutral to bullish. This is definitely, we need the stock to move and want the stock to move. Now we're going to do a couple of contracts here, and we're just going to do the same thing. We're going to do a first trigger sequential. We're not putting a stop order on here. Okay, we're looking for the stock to make some moves. And if we need to start locking in some gains, we may add on a stop loss in addition to the target. But right now we're going to start with no stop loss on it. Okay, so we'll create our opposite order here. So risking 460 or 450 to make 550. We could go for another chunk of it as well. This time, let's go for, say, 75%. We're going to be in the trade a little bit longer. So let's take 75% times 550. Says, okay, that's about 412. All right, I'm going to put 412 on here. And that's what we're going to add to our current net debit of 450. It past has been a big mover over earnings. They're not guaranteed to be a mover. But you can see right here, for example, you can see kind of the big gap here. Let me fix this. From their earnings. It was there and it gapped clear up to here for the earnings 2 months ago, back in looks like May. And then more recently here, this is in September, it gapped down. Okay, so it put in basically what's right now 52-week high and really gapped down. Now, it's not guaranteed that it's going to gap down or up, right? It's never guaranteed that it's going to make some sort of a move there. But I do want to put something on the screen. I'm going to add another label. You can see I've got these other labels, how much they are year to date, month to date, and so forth. The one I want to add on here is the market maker move. All right, that's a study. I can share that with you. I'm going to go ahead and add it. All right, add selected. There we go. And let me go right here. And let me just share it. And what it's going to do, it's going to put the market maker move on our chart so we can visually see it. Share. Going to give us this little URL. Those of you that are in the class live, I'm going to post this out to the chat. So if you're interested in adding that to your own charts, you can. Those of you that are not here live and you're listening to the recording, because I know there are lots of you that do, let's just say okay here and okay. I'm going to post it out here in my chat. You might need to pause it and then take note of what the URL is. I'll also post it in our notes, our post-production notes that we do. Now, this would look a little bit better if we still had our white back or our black background. So let's just change that real quick on our chart. So instead of being a white background, let's go for a black background. And then that market maker move is showing, okay? So the market maker move, for those of you that might not be as familiar with it, it's what the market makers are pricing into the options that they think will cover the expected news or expected move for the news. The news here is earnings. Now, it doesn't have to be just earnings. It could be product announcements. It could be FDA rulings that are coming up on maybe a stock that has a, some drug that has been studied and they're waiting for some approval or something like that. And so this is telling us that the move here is about what's being priced in is a 7.75% move. Again, it's not guaranteed to do that, but then it shows us where is that move. They price it in on the at the money options. It comes out there at about 593 and 513. So there's a big old range here that they're looking for the stock to move. Now, so what we're going to do here is we don't know which way it's going to break or if it's going to break. And so we're going to play both directions. But sometimes people are used to playing both directions by selling an iron condor, where we are expecting the stock to maybe stay in this range. What we're going to do is we're going to put on an iron condor that's going to look for movement beyond our short strike prices. So we're going to put on a long call long call vertical and a long put vertical. And we're just going to expect a move of some sort. We want it to be big, but we don't care which way it goes. And one side will probably lose. The other side is where we're hoping to profit. Okay, so let's come and look at our trade tab here. Chris says, I haven't done a long iron condor before. Well, this will get us exposed to doing that, going a couple of different, seeing what might be possible. Okay, so it actually comes in here on iron. Well, this is actually more of a short iron condor. This one, it definitely is more directional. So we've got our long call vertical and our long put vertical. Okay, both of those together. All right. Any questions on anything that we ran through? Any questions that you have? Thank you, Barb, for helping out with our questions. I do not see a survey out there today, so you're off the hook for that. But if you haven't subscribed yet to our Trader Talks channel, go ahead, click on that link, that little YouTube logo in the bottom right of the screen. That'll allow you to subscribe. Makes it a lot easier for you to find our content when you do that. Okay, how does that look? I'm going to just show you real quick because we do have a quick moment. So let me jump over there and show you what it'll look like. And we're going to come over here. Let's see, why did it not pop up? Let's try this again. There we go. Here's our Trader Talks tab. Okay, so you're looking maybe to brush up on your option strategies and maybe even get some of the basics down. You might want to find Barb's playlist of getting started with options. She does a fabulous job with it and takes time. Each week is a different strategy that she goes in and explains how it works. We also have some lists for you. You can tell what's coming up next. Market and sector analysis will be up next, right at the top of the hour. And then some other groupings that we have. So it just makes it easier to find our content in that YouTube setting. All right. Thank you so much for being here. We've got several stocks that we need to follow up on that we'll do next week. So thanks everyone for being here. Thank you, Barb, for helping me out with those questions. And we will follow up on all of these trades next week. We'll see you then. Bye-bye.